Hello, everyone. Happy Friday. Not much to talk about besides get rid of the friggin' Fed. How's everyone doing? Good morning, McRangers. Yes, I did see that, and thank you for correcting. And I did look it up, and yes, it is still undecided. But as R. Terry says, welcome. Pretty much going to happen. Hope it does. Hope it does, because maybe we can get some stuff done at this point. Hey, Pavneet, thank you for tuning in today. Patrick, good morning, good morning. Happy Friday to you. Good morning, Jacob. We'll let some other people come on in. Got a text from Sterling this morning. I actually got one yesterday after surgery. He was back home and now he's still recovering in a lot of pain, but he is making progress. It's going to take him a few days to recover. So continue the prayers and well wishes for Sterling. Please, if you choose. Maybe he'll recover quickly and can jump back in here. So, anybody watch the Fed press conference yesterday? I mean, this is why I've said for years. I've been, even since the Greenspan years, get rid of the friggin' Fed. I'm tired of this arrogance. I'm tired of this absolute crap. Okay? Just abolish the damn thing. They have stuff running way hotter for way longer. You ask Powell. Is there any way you could let inflation drop below the 2% mandate? By the way, their mandate, as written in 1978 by Congress, is 0%. 0%, not 2%. Can we let it drop below 2%? Absolutely not. Well, guess what? How do you remember when they used to think? Keep moving the goalposts, by the way. How do you get an adjusted 2%, an average adjusted 2% if it can never go below that? How are you going to average out the last few years? Can people get some relief? No. Oh, and then he says, well, how's it going to correct? Well, wages are going to take a long time to catch up. They're going to have to catch up like house prices and everything else. They're going to have to catch up. Yet, but real wages have been negative. Okay, when you strip out wage gains and you actually take the cost of goods increases, that's been outpacing wage gains. And whenever they say, oh, look, wages are softening now, they're not going up as much, which they're celebrating because that should lower inflation. But then how do you ever catch up? How do you ever catch up if you want inflation running at 2% or higher? It's just that get rid of them. Get rid of the clown show. See, here you go. I mean, this is summed up by Mish, but Jim Bianco retweeted this yesterday. Sorry about the ads. Here. You see this do you see these slopes going up here? This is food prices. Okay, yeah, it's leveling out because we're getting closer to that 2%. But what about this? What about this? Where's your average? Average this over the last 5 years. Average this. Does it come anywhere close to 2%? No, nowhere near. So how do you get back to 2%? What a joke. What a joke this is. And I've been on getting rid of Fed for many, many years. It's been forever. It was pre-Bernanke, Mr. Helicopter Money. You're not helping stuff. You're trying to micromanage the economy. You ran things hotter, and these people aren't friggin' accountable. They're not. And yesterday's press conference made my head explode. So, hello, Charles. Good morning, Royal Palms. Yeah, long live Sterling. Flat and honest. It's all fake. R. Terry. This is just a complete and utter clown show. You want to know one of the reasons Trump won is because of all this friggin' inflation, which you dump it. But he's partially responsible for it with dumping all this money and extra stimulus into this thing. He's not, his hands are dirty too. But we cannot be micromanaging. Just come up with a rule. If you're going to keep around the Fed, it should only be a lender of last resort. Don't try to let the free market set the rates, because this is an absolute clown show. I'm glad to see Ron Paul bringing Ron Paul back in. Okay, hey John, how you doing? All right, so ending the clown show of a week. That's my word today, is clown show. I'm going to stick with it all weekend, so you guys don't have to hear me rant all weekend, but my wife will. A lot of people love those stimmies. Yeah, do they love the inflation that came along with it? If people realized for the money, the stimmies they got, oh, look at all this is free money. It wasn't exactly free, was it? And you know what? Your inflation, the way you're hurting, long is going to outlive the little checks you got. By the way, we shouldn't have closed everything down and everything else. I mean, I'm not even going to start on that. I'm not even going to get started. Can we chart the gold, silver? Yeah, I'll try to get to that today. I forgot to put up a chart already. We have Michigan consumer sentiment coming out at 10 Eastern. Again, paying attention to inflation expectations. I'm going to be real interested in to see how these final numbers come in. So in a couple weeks, we're going to get the final numbers. We got Bowman. Yay, more Fed speak today. There was not even one person dissenting yesterday, which pissed me off too. We needed another 20. You know what? And they're probably going to cut again. They're probably going to cut again in December. And then let's just see how this all ends up. Would you step down if Trump asked you? No. No. Because, yeah, go. Who do these people report to? Who? Can we just get back to the House of Representatives passing a friggin' budget? We need a friggin' budget. We need to stop all this debt. It's going to blow up at some point. Don't know when. So we have the inflation expectations and the consumer sentiment. This will probably bounce big time, either on the final numbers or because they're still surveying people, or especially next month. But this month we'll have to see. And I'm really curious with Trump coming in what we start seeing with inflation expectations. S&P 500 map, you have mega caps and chips a little down, slightly down. Banks bouncing back today. In your groups, let's just refresh this real quick. We have real estate. I have no idea why real estate's leading besides the 10-year yields pulled back a bit, like to 4.325. Basic materials in the dumpster today. Fed watch now for December still favors 67 to 32 for another rate cut. And we're still solidly in greed mode. And the Shiller PE back over 38. Yay, super cheap market. Ha ha ha. That's not going to end well either. You can see I'm in a mood today. Sorry. There was nothing to report yesterday. It's major. And today there's nothing really to report that was market moving. So unless you're interested in those individual stocks, that's about it. Where else do we sit right now? We're right at 6,000. So we've ticked off. That was the end of year target for a lot of people. Sin, it's already done. It's not even, we're done with like the first week of November, really. We're already there. By the way, the next harmonic is 60-60. Key support is back at 59.25. I just advise not doing anything stupid today. Broke down from a very flat little double. So I'll just be watching that in case we do pull back even further. I mean, it's already hit the conservative targets right here, so it's not really tradable anymore. But if we pull back, it's right at the key area I'm watching then for support is about 59.90, 59.88 to 59.90. For key support, if we break below that, your major support based off the 4 hour, and you see how the 4 hours right at the bottom of that double the rotation zone. The next key support is about 59.65, then 59.40 are key support levels. If we break out to the upside, if we want to use our little short-term harmonics for any day trading, and this would be for day trading today only, be looking at, if we do a rocket up, it's about 60.49 to about 60.60. I'm not expecting that. Again, if you want your little minor levels, sorry for messing the chart up there, your little minor levels, I'd be looking, once we get a pre or a post open low, I'd use your little minor harmonics. So if we break above 6,008, it's 6,016 roughly and 6,019 would be the two key levels. Now, if we make a new pre-market low, you're going to have to drag those down. All right. Again, it's Friday, post-Fed. We've already had a major run up this week, so don't do stupid on a Friday post Fed. Don't do stupid on any Friday after it's been a major trend week. The we're sitting right at the 4-hour rotation zone on the Nasdaq 21,120. We drop below there. There is not a lot of support until we come into about 20,950. So that's the only level I really have. Besides what's established, I'm going to be watching for support and resistance that established right after the open this morning. I think we could go into a choppier day. The Dow just pausing sideways at the next minor harmonic, this 44,030 level. We hit a 44,020 yesterday. So that's still key resistance. If we break above there, going into next week is 44.2. And key support is 43.8. What else do we have here? We have a little mini double top in the Russell. It's getting lopsided, and if this keeps extending, remember it will be off the table. Okay, you got 1, 2, 3, 4, 5, 6, 7, 8 bars to make up the high to high, and we're 1, 2, 3, 4, 5, 6. So in 2 more bars on a 4-hour chart, if this does not trigger, it's off the table. If we do break above the highs, remember the next major levels. The next major is 2563. The next minor level, based off the most recent little push harmonics, I got to adjust that level down a bar, is 2452. Any thoughts on the CPI? Yes, the CPI and PPI are next week. Oh, this is, don't get, see, you got me started, MJ. You got me started, because now what are they saying? They're saying we're looking at the 3 to 6 month average. That's now they've changed. Remember when it was PCE, then it was Supercore CPI. It was the Supercore. Now they're looking at what, the 3 to 6 month CPI. They keep changing. They just want to find whatever numbers support their narrative now. They're just changing. They don't have a set rules or data dependent, but you're always changing what data you're looking at. So, do I have any thoughts on that? Yeah. Yeah. By the way, here's the little thing for next week. It is on Wednesday. And here's the thing. You're going to have to look at the Nick Timmerus, because he puts out the 3 and 6 month. But month over month, it's still expected. Core inflation is still expected to be 0.3, but they're looking now at headline. Remember, they were looking at core, then super core. Now they're citing the headline because those numbers are better. But still, month over month is still expected to be 0.2, which gives a year over year of 2.4. That's not even 2 yet. Sorry, not even 2 yet. Oh, we're going to get there. But we don't want to undershoot it. If this prints a 2, what are they going to do? Oh, say we can keep cutting because and then what happens if the core keeps going up? I mean, this is running at 3.6 annual. It's expected to come over of last year 3.3. Nowhere near that 2. You better be sorry, MJ. I think that's insane. That's insanity. We have too many zombie companies out there. A lot of companies were expecting longer term rates to come out so they come down so they could refinance. Longer term rates next year, there's going to be a lot of debt coming due. And everybody says this is the start of a new bull market. Last time I checked, you don't really start new bull market unless earnings go through the roof, but you also have the consumer tapping out. Consumers are cutting back. So why even the retailers are warning this holiday season, they're cutting back. So you got, consumers have to spend to really grow. You're not going to grow your way out of this kind of thing. And tax cuts. Let's say at least the Trump tax cuts, they'll have to renew them. They still have to renew them because they're set to expire. They're set to expire, so those still have to be renewed, and then that's just renewing them, not putting additional things on there. We still have to see. And all this other things are going to take time to ripple through the economy. So you know what? We need a friggin' correction. before, and we need to get valuations back to a sanity level before we start another major new bull market. Well, that's what I'm saying. Well, we've had a soft land. See, it's all just a bunch of crap. I've said this, Pavneet, here on the Russell. First off, if you want the best ones, go to your weekly chart. So I have here, you see here, the reverse harmonics from this last major low in October back to the highs. Okay, I'm using the reverse harmonics and then use the most recent ones. Okay, the really short-term ones are for these swing lows. You see this swing low to this, you can't see the pausing bar because we don't have one yet on the weekly, we have one on the daily. But this is the major swing low I'd be using. And the major one I'd be using is the reverse harmonics there. The minor one I'm using is here. Because you don't want to come to every swing low. You're going to have too many things. So learn, when you get better at it, you're going to know the major swings that you can utilize. But use the most recent and use the long-term one. Now, once we get to a new high, you can always then switch from the reverse harmonics, especially if we hit the first target and get a pausing bar, then switch back to the forward harmonics. All right, VIX, back, no fear in the markets. DAX, back, we're getting a ton of volatility. Look at this back and forth. Look at this DAX volatility. But it's still caught in the range. We have no close above the 62.5 yet. So the key levels I'm still watching are 19.534 or a breakdown below 19.1, pretty much. The notes, little pause here, back to the rotation zone with cycles now at the top. So next week's going to be very telling. Not this week. We're going to have to look at that closer next week. We've pulled back to the rotation zone again with cycles getting to bottom on the yield. So next week's going to be telling. Maybe we rotate back up, put in a short-term double top. Or just a consolidation. Remember, we have been running out of momentum on the yield. All right. So we can easily still long-term consolidate up here above the weekly rotation zone and even back above, holding above 4.2. Yes, it give a little reprieve, but not a lot. Because remember, we closed last week above the 62.5. So we should, probability-wise, still, after we get out of this overbought with weekly cycles at the top, we should still continue to push higher. Probability-wise, not guarantee-wise. So that's why I'll be watching for some kind of pause, consolidation, cycles at the top rolling over, and then back to potentially yields climbing unless we really substantially break down. 10-2 is not much to talk about yet. This did not get into double territory and is finding very strong support at about 5 basis points. The dollar index. You know, holding key support yesterday. Big reversal day, but fascinating enough was an inside bar to the election results. Huge volatility in the dollar. But still closing a little below support today, but then moving back up and opening at support and holding up. As long as this does not come back down and close below 103.50, 103.45, we'll still remain in bullish mode. But next week can get interesting also with weekly cycles at the top and daily cycles getting at the top. So we might see some consolidation or reprieve in the dollar next week. Again, not a lot of great setups today. Crude, trying to form a little higher base here. Again, nothing really substantial to talk about there. Gold. Nothing's changed since yesterday. On any follow-through buys, I needed to get back above 27.45 in the short term. Other than that, also still watching if we roll over again for a upward neckline sloping head and shoulders, which could, if that triggers, put in a more medium term top after gold's run so far so fast. You wanted the here's your gold silver ratio chart. You can see here it's not as bad as it was. I mean, it's still very elevated, but I'm expecting over time, okay? Over time, I'm going to be watching this to shift back in terms of silver outperforming gold. Now, does that mean silver holds steadier and gold pulls back? Does that mean on a next leg push up that silver outperforms gold to the upside? The key thing I'm watching, if you're watching the ratio, is it to start to break down below about 76 on the ratio chart. If that starts happening, I'll really start focusing on silver more so outperforming gold. All right. And in the short term, if it breaks back above 90, I'll watch for gold in the very short term to outperform silver. But remember, outperformance does not necessarily mean to the upside. But those are the key levels I'd be watching. And if you're going to use a ratio chart, put it on a line chart. Don't try to do the candlestick stuff on it. Okay? So that's where we sit right there. You also have copper. I talked with, again, Futures Edge should come out early next week. Copper, massive snapback yesterday, but holding key support. And I gave the key level to Jim, which for any copper bullish stuff that I need to get above. You got it, McRangers? All right. By the way, 10-year, JGB's 10-year government bonds in Japan back above 1%. Look at this. This has been slowly climbing up again with the weakening. Little pullback. So we've had a little strengthening yesterday and so far today, but the yen should continue to weaken. The thing is, when are they going to intervene again? But this could get interesting with JGB's back above 1, and the yen weakening could get interesting again for the Bank of Japan. Again, tons of volatility yesterday. That's why I want things to shake out today. We're going to take a look at that later. By the way, the spiders yesterday came straight to that next cluster area. You see how the day before hit the minor reversed harmonics, and then this is hitting your more short-term harmonics. Okay? So we have a nice little cluster there, which is checked off. Now we need a pausing bar. Now we need a pausing bar to start doing the next harmonics up. But the next key level, if this does continue, is 605. Key support coming back in at 586. The Qs, you see how the day before hit closing exactly at the minor reverse harmonic. And then we have the backwards harmonics from August 5th to back to July, the 10th of July, 10th, 11th in there, 513.53, where we hit yesterday. So the next key area for the Qs, 523.50. We can't do, you'll now go to forward harmonics on the most recent swing pattern, but we don't have a pausing bar yet. So I'm going to see if today develops a pausing bar that does not take out Thursday's highs. If we get that, then we get a pausing bar, and then we can do our forward harmonics. So that's some little lesson on harmonics. Bitcoin, we're stalled out at the reverse harmonics, 76,933 to be exact. And the high was 76,999. If it breaks through there, next is 78,898, so 78,900. It's really it. Ethereum finally got a move going on too, but it still has not invalidated the longer term downward pressure. By the way, Tesla did not close above the 62.5 yesterday. Just missing it out on it. So it's going to be interesting to see where it closes today. Cycle's getting back to the top. Markets are open now. Let's just take a look at the S&P and the tick. Again, on the continued rally, we got 6,010 is very key resistance. 6,010 to 6,011. Let's see the tick. Not a super strong tick opening. 200 on the tick. So I'm watching to see where this pulls back to after the open gets in, and to see if this key resistance area holds. Because I'm more positioned today to watch for more chop being on a Friday after a Fed day. All right. Thank you everyone for tuning in. And I hope everyone has a wonderful, wonderful weekend. You know, we're closing in on Thanksgiving. What is it? It's late this year, though. It's still nearly 3 weeks away. It's Black Friday would technically be 3 weeks from now, wouldn't it? So Thanksgiving, less than a day under 3 weeks will be Thanksgiving Day. So that's where we sit. I hope everyone, though, can spend some time enjoying some nice fall weather this weekend. Enjoy maybe some football. And come back next week fully refreshed for Inflation Week. Yay, Inflation Week. You are welcome, Charles. You have a great weekend too. And remember, keep Sterling, send him some positive energy so his recovery happens. Maybe he'll get a lot of recovery done this weekend and can hop back in sometime early next week. Mondays, yeah, so thank you, Patrick. Monday is a holiday. I will not be here then. It is we can't call it Columbus Day. See, there's nothing here. Monday is a holiday. Thank you for Patrick for reminding us a holiday on Monday. The futures markets are still open. But I will not be here. Unless something happens really, I'm going to look at stuff because I'll be looking at the futures Sunday night and Monday morning. So if something major happens, I will pop on. Like if something major happens in the world that has an impact on the futures markets. Other than that, because stocks will be closed, stonks are closed, I'm going to take the day off unless something major happens. So expect to see me Tuesday for a shortened trading week. Thank you again, Patrick, for reminding me. I completely forgot all about that. I will talk to everyone hopefully Tuesday because that means nothing happened on Monday. Bye for now. Have a great day.